Meantime, how attractive are Greek bonds to investors? Let's turn to Johannes Mueller, Chief Fixed Income Economist of DWS Investments. He joins us from Frankfurt in the afternoon there, morning here. DWS, we should say, is the largest mutual fund in Germany. They've started to build up a position in Greek debt. So let's turn now to our guest. Johan, I want to ask you, we just had Bill Gross on the program. He said earlier on Bloomberg that he probably wouldn't be buying Greek debt. This bond offering that we're waiting to see this week, is DWS interested?
Well, definitely. I mean, Greek government debt has widening in spread significantly, and at some point it's just tempting to start looking at the issue. It's not very realistic that you really pick the highest point in spread, but increasingly we are gaining confidence, and we are seeing more and more evidence that there's public support in the pipeline. Support from other EU governments, and as well as from the EU itself maybe, and hence implied default probabilities as they are priced right now in the area of north of 40% for 5-year paper starts to look interesting.
Mm-hmm. Well, in terms of gauging that level of interest you're talking about, the latest calls are for Greece to make even further cuts to its own budget there. What do you have to see to feel perhaps a little bit more comfortable with the situation there?
Well, I think there are 3 important points to consider. The first one, of course, is the budget deficit. A lot has been said about the budget deficit, and given the situation and the difficulties the Greeks are in, they have to work on both sides. So they have to cut spending on the one side, but they also have to raise taxes. And we'll get the details, but I think that the government is serious about that. Then the second important issue to watch is, of course, liquidity. We all know that Greece has to refinance 2 bonds maturing in April and May. So there isn't too much time left for them to come to the market in order to finance, in addition to the ongoing financing needs, those 2 redemptions. And the third point, of course, is confidence. I mean, the Greeks have done an excellent job in destroying confidence by the way they have done their public accounting. Mm-hmm. But currently they've got Eurostat in, and I think testimony from Eurostat would be a very important step in that direction.
But you still think there's going to be a severe recession in that country?
Definitely, yes. I mean, the country is already in a recession, but the underlying fundamental topic, and this is a long-run topic, this is not a topic for the first or second quarter of this year, the ongoing topic is that Greece has lost in competitiveness as well within the Eurozone as well as outside the Eurozone, and they have to repair this competitiveness. This is nothing unusual for the Greek economy. In the past, they've repaired competitive issues by devaluing the currency, but this is no longer an option since the euro is fixed. Hence, they have to devalue in real terms, and this is not a fun event. And this will take quite some time, and this will be the real test for the Greek economy. Now, but I think this is not so much a story of 2010, that might be a story of 2011 or 2012.